There are three moves you can make right now to minimize taxes for 2026. The first of which is to take a look at your estimated withholdings on your W-2. So last year with OBA passing in 2025, that had an impact on the withholdings that occur on someone's W-4. So the W-4 is how we outline how many withholdings we should take and how much you should hold back on every paycheck. We can adjust that number if you had a large refund. You actually want to adjust that number because what you don't want to be doing is giving the government a interest-free loan. Okay, so that's the first thing we can do, is to make an adjustment on our W-4. The second thing that we can look to do is to make certain investments today. So what we mean by that are, traditionally we see clients who are making 529 contributions and backdoor Roth IRAs later on in the year. You can actually do a backdoor Roth IRA all the way until April 15th of 2027 for a 2026 tax year. But why are we holding off on doing that today? Because if you think about it, traditionally over time, stock market makes money in 3 out of 4 years, up around 20%. Then we would actually want to put that money to work earlier in the year and allow that growth to occur tax-free. It's not just in the Roth IRA. It's also the same thing in HSAs and also 529s. So those are really three investments that we should be making early on in the year. One, again, is a backdoor Roth IRA. Second are your 529 contributions. And the third of which is any HSA investments that you're going to make for the tax year. The third and final thing that we can do for tax moves we can make right now to lower your taxes in 2026 is to look at tax loss harvesting. What I've done here is show the performance of the Mag 7. So these are names that we all know and love, whether that's Meta, Apple, Amazon, Google, Microsoft, so forth. What you see here is that out of the Mag 7, actually it's kind of a Mag 4. So these three here, Meta, Tesla, and Microsoft, have all lost money this year. So what you can do in this scenario is, let's say you put money to work on January 1st, okay? I put it into Microsoft, I'm down 14%. Believe in Microsoft for the long run, totally understood. We can realize that capital loss right now, okay? So instead of a capital gain, we have a loss of 14%. Round numbers, we put in $100,000, we have a realized loss of $14,000. What we do is we actually buy this green right here, which is VGT. It's kind of a proxy for technology stocks. It's an ETF that captures all technology stocks. So Microsoft is within there. It's a large holding within there as well. And that way, hold on to it for 31 days. Then you go and you buy back Microsoft. Because traditionally speaking, kind of see it here as well with all these stocks, they kind of go up in unison and down in unison. And yes, it's not exactly the same, but what you're going to prevent yourself from doing is selling Microsoft at a loss. Stock market rallies 10%, and you're sitting there saying, yeah, look, I know I just saved $14,000 on taxes, but I also just lost $10,000 in gains. And I'm kicking myself because I sold at the wrong time. Or use an extreme scenario where it's up 20% in 30 days. In that scenario, a beat on earnings, something like that. In that scenario, though, you would have lost out on the gains if we did not go and buy this VGT. That's the final thing that we can do, is to look at positions you own. More than likely than not, it's with stocks. Positions you own that are at a loss. Realize that loss today to lock in the loss. It helps you on your taxes. It gets realized. It's reported on the 1099. And then you find a similar investment so that you don't miss out on the long-term performance of that stock. After 31 days, we go back into that individual stock or into that ETF. So again, the three things that we can do right now for a successful season, we don't need to hold off on. First is take a look at our W-4 and how much we're withholding on taxes out of our income that we're receiving. Second is there's no need to wait on making contributions and investments for your backdoor Roth IRA, your 529s, and your HSAs. Then the final one is being very wise about taxes and realizing that the market doesn't just go up in a steady straight line. If we have some losses right here, realize those losses, get the tax benefit of that, and then still invest in a way so that we experience that rebound in price over time. Thank you.